20-year auction. Now, a 20-year maturity for a lot of people in the bond market, not a great maturity. A weak 20-year auction for a lot of people in the bond market, not worth paying attention to. Why was it so important this time around? Is it a reason to sell or an excuse to sell?
Hi, John. Well, I think you're right. I mean, I think when we're thinking about this, is it a cause? Is it a symptom? And as you said, a weak 20-year auction is not unusual. It typically has less demand anyway. But we've already seen in the last couple of weeks, and particularly this week, especially after the Moody's downgrade, that there's been this narrative of concerns, which has been like a hum, which has been growing louder and louder, concerns around the deficit. Now, if we had spoken maybe 3 or 4 months ago at the end of last year, maybe, and somebody had said, when does the US really need to confront its debt issues? A lot of people would have said, you've got another decade or so. Increasingly, it feels like this administration is going to have to confront the problems because the bond market has lost patience and is really going to force the issue through to make sure that there is some realization that continuing to expand its deficit, its debt numbers indefinitely, is simply not something which can continue.
Seema, let's talk about levels. Life above 5% this cycle on the long bond hasn't been sustainable. How problematic is this level? How self-limiting is this move?
Well, I mean, if we think about it in terms of the 10-year, there's always some thresholds which are thrown around. Typically, it's been the 5% level is the bit where the equity market really starts to stumble. I think increasingly, because we've seen growth downgrades over the last couple of months because of all the issues around tariffs, we're probably looking at a slightly lower level in terms of equity market resilience. For us, we're looking at a 475 handle. Of course, it depends the speed at which we get to that point, and of course, what the reason is. If the reason is because of better growth expectations, that's okay. If it's really around concerns around the fiscal side, well, that's a slightly different story. So we think that the equity market already is being somewhat pressured, but I think the pressures would likely grow if you start to cross that threshold.